Here we are again at the TRADER24 studios. The week ahead looks to be an interesting one as macroeconomic data on the one hand and the expected corporate earning announcements on the other will put their own stamp on the market's canvas. A canvas already painted in the colors of high inflation in the major economic systems, high energy costs, and an endless war, whose medium-term consequences have not yet been reflected. In other respects, the freight market is under pressure, having lost over 50% of its average since late 2021. Gold and silver have suffered heavy losses in an environment that would traditionally favor bullish sentiment, while the government bond market remains under pressure, seeming to have long anticipated the tight situation. You're watching the TRADER24 Global Market Overview. Let's take a closer look at the situation. On Wall Street, the week ended with the first positive session after a streak of 5 decliners, with the New York Stock Exchange index closed to plus 2% at 14,450 points. Banking stocks took a backseat and boosted morale with Q2 results. However, modest trading activity prevents the drawing of safe conclusions. For now, the 14,000 level has acted as a buffer to the seller's fury on the way to 13,400, while the negative scenario is more favorable and the upward reactions are not taken as a reversal of the current downward trend. S&P 500, Dow Jones, and Nasdaq closed with strong gains of 1.92%, 2.15%, and 1.79% respectively, permanently in positive territory, while small-cap Russell 2000 followed with plus 2.16%. All S&P sectors closed positive, with financials 3.38%, telecoms 2.57%, and healthcare 2.41% having the biggest gains. The VIX risk index lost 8.22 percentage points to 24.23 points, closing the gap of bets in favor of the fall. The main positive protagonists in large cap were Citigroup 13.23%, State Street 9.74%, and Netflix 8.20%, while in the technological sector, Illumina had the best performance plus 6.76%, Splunk plus 6.28%, and PayPal plus 6.27%. And finally, in the industrial Dow Jones, just 1 of 30 remained negative, P&G at minus 0.20%. In the pre-market now, most listed companies are moving into positive territory, with the Chicago futures giving a bullish open plus or minus 0.50% at least for now. Asia closed strongly upwards. The Hang Seng gained 2.36% to 20,773 points, boosted on the one hand by optimism on Wall Street and good retail sales data, and on the other by positive export results, which saw 5-month highs thanks to the resolution of supply chain problems from the recent lockdown. Japan's Nikkei closed up 0.54% at 26,790, and the Sensex closed up 0.54% at 308.52. Finally, the Australian 200 saw gains of 0.50% to 6,640, with the New Zealand CPI rising to 7.3% year-on-year. European markets moved sharply higher on Friday. The DAX and CAC 40 closed at 2.76% and 2.04% at their highs of the day, while the 50 and 600 Euro stocks closed at 2.37% and 1.79% respectively. ASML stock recorded the biggest gains at 5.06%, followed by those of Volkswagen 4.70% and Siemens 4.42%. For now, the key indices are in the green with gains of over 1%, and on the Athenian Stock Exchange, Greece is up 1% on the general and the 25 large cap indices, with the banking sector outperforming at 2.95%. In U.S. Treasuries, sellers prevailed again, leaving the 10-year yield at 2.93%, a few basis points below local highs, with that of the 30-year falling to 3.09%. The interest rate curve flattened again with a 2-year around 2.92%, while in Europe the German Bund sees the yield of 1.17%. The spread of the Greek is at 236 basis points, the Treasury at 179 basis points, and the gilt at 97 basis points. Bond institutional investors appear to have partially anticipated the high interest rate regime, and in the short term, the aggressive 100 basis points Fed rate scenario appears to be moving away. In the forex market, the euro-dollar exchange rate does not seem to break out of the parity zone, closing more than 100 hours around it. However, there are currently supportive markets coming out to approach 1.04, always in a bearish pattern in the context of the expected involvement of the European Central Bank in the interest rate war after the release this week of the inflation data. Partial mitigation of strong dollar buying is currently being seen, with the respective DX index standing at 20-year highs and just below 108 points. The pound now stands at 1.19 and the Swiss franc at 1.0240. The yen-dollar exchange rate is also at 24-year high above 138 yen, with special mention for the New Zealand dollar, which shot up to 0.62 against the US dollar in the shadow of the inflation announcement at a 32-year high, forcing investors to expect a 75 basis point scenario in the domestic benchmark interest rates. Biden's attempts to reach a deal with the Middle Eastern oil producers on the supply issue proved fruitless, so that crude oil would remain below $100 and at 3-month lows. The Saudis have indicated that they will insist on relating production expectations to market dynamics and demand rather than to U.S. needs. There is also the problem of very expensive natural gas, with TTF at 159 euros per megawatt hour and Henry Hub now passing $7.10 per million thermal units. Gold and silver continue to be under pressure, with the latter having lost all of $19 per ounce, while the traditionally deflationary investment instrument has failed to prove its worth, being below all of $1,710 per ounce, always in negative territory at 11-month lows and well off the highs of $2,060 a few months ago. In agricultural commodities, wheat lost $7.9 per bushel, also seeing new 5-month lows, but the announcement by U.S. officials that they will not sanction imports of seeds from Russia is a positive sign. And in fact, the USDA has released a report that indicates a strong expected supply in the coming weeks. Coffee marginally held at $2 per pound at 8-month lows, mainly due to the chain reaction of the strong US dollar and the depreciation of the Brazilian real, while cocoa also remained at its own 7-month lows, around $2,320 per ton. Finally, in the freight market, the Baltic gained 7% to close at 2,150, mainly due to an 18.8% increase in Capesize, with the Panamax closing negative for the 19th session with a 1.8% loss and the Supramax making a new 5-month low. In terms of economic announcements, nothing earth-shattering is expected today, but in Europe, tomorrow all eyes will be on the Eurozone CPI results for June. Well, in the US, upbeat retail sales data for June were released on Friday, which obviously helped the good sentiment in the equity markets. In terms of corporate announcements, today we expect the financial results of Bank of America with projected earnings per share of $0.7765 and revenue of $22.82 billion. IBM with projected earnings per share of $2.27 and revenue of $15.09 billion. Charles Schwab with projected earnings per share of $0.9141 and revenue of $5.03 billion. And Goldman Sachs with projected earnings per share of $6.77 and revenue of $10.84 billion. On Friday, financial results were announced by United Health with earnings per share of $5.57 and revenue of $80.33 billion, both higher than forecast. BlackRock with earnings per share of $7.36 and revenue of $4.53 billion, both below forecasts. Wells Fargo & Co. with earnings per share of $0.82 and revenue of $17.03 billion, both higher than forecasts. And US Bank Corp with earnings per share of $1.09 and revenue of $6.01 billion, both higher than forecasts. Last week's optimism that followed the CPI announcement seems to have continued over the weekend. The two largest cryptocurrencies by market capitalization, Bitcoin and Ethereum, have continued their steady upward trend, especially since Sunday afternoon. Specifically, Bitcoin managed to break the $22,000 barrier, the area where it was trading 10 days ago. It currently trades above $22,200, and Ethereum, on the other hand, found itself above the 1400 area, which it had not approached in over a month, during which it traded steadily between 1000 and 1200. Among altcoins, Avalanche and Solana stood out, which seemed to be approaching the highs of the early last month. Avalanche is currently above the $23.60 level, which it had not been near since June 3, while Solana has entered the $42 area after 1.5 months. Thank you for joining us today. It was the TRADER24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.